Joining me now is Muhammed Wagley from Sasfin Wealth to give us his take on the market's activity. Muhammed, thanks so much for your time this afternoon. And perhaps let's start off with your reading of markets action. I mean, it's July 9th, what we thought would be D-Day when it comes to trade deals. But hey, here we are sitting again with new threats, new tariffs coming through. Only two countries have signed trade deals. We have a trade truce with with China. It just still seems like there's so much confusion, so much uncertainty, but markets are in the green. What's going on?
Yeah, well, first of all, Ntaling, always a pleasure to be on. But yeah, this is really what's been driving discourse over the past 2 days. I think, you expressed confusion that we should have seen a little bit more movement on the back of this. And I think that sentiment is being echoed, pretty much across the board. What it reads like to me is that, markets and governments in general are starting to maybe take these tariffs with a bit of a pinch of salt. It does seem that there isn't actually as much impetus to get, this quantum of tariffs in, from an American perspective as well, so taco trade is probably, very apt, at least in terms of tariffs. It's been quite consistent, these things just haven't gone through. We look at sort of the labor market data and everybody is looking for the inflationary impact thereof, but the truth is we actually haven't seen any of this sort of set in. When we do get sort of a big quantum of, let's say, for example, 50% increase on copper, what's happened previously is that there's a backtrack, in the same week more often than not. And if we look at sort of the tariffs that we have seen, you mentioned copper, and there was the 200% proposed tariff on pharmaceuticals. I just think we've got to take this with a bit of a pinch of salt, because in terms of feasibility, I just don't know how realistic this is. It's not as if, let's say, the US is a massive copper miner, so if the premise is that this is going to benefit the average American, I just don't see how that's going to happen. If I was a little bit more cynical just in terms of this copper thing, I would imagine that it's so fundamental within the whole electrification case, and obviously a big part of that is your electric vehicles. We know that there's been a very public spat with Elon Musk, who's just started his own political party, the America Party, if I remember correctly. And again, if I was a bit more cynical, I'd say maybe it had something to do with that. But even that is a stretch. It's actually very difficult to make sense of this.
It really is, Mohammed. I mean, one day we're in the green, next day trade is choppy, and it just doesn't seem like, we can make what's playing out in the US and how that is filtering through to markets. Over in Asia, we saw some pressure coming through, particularly when it comes to the Hong Kong Hang Seng, following a 3.6% drop in Chinese producer prices, further fueling, those deflationary worries. How concerned are you about that inflation picture over in China?
Yeah, so I mean, this isn't necessarily anything new. We've been seeing softness in that respect for the better part of the last 2 years. In fact, there's been relative softness subsequent to COVID, and we just haven't seen a recovery. Obviously, a lot has been made of the property market collapse, and that's not helped. In fact, it was sort of, underpinning a lot of the performance that we've seen over the past couple of years. I think the worry here is that, even though we have seen stimulus packages come out, in a lot more sort of with a lot more with a sort of a lot more consistency than we had seen previously, it just feels like that isn't enough. We're probably going to need to see a lot more of those stimulus packages going forward. And I imagine that there's going to be a lot of pressure on sort of lawmakers, policymakers over in China to make that happen, because looking ahead, unless there's some sort of, external catalyst like that, it just feels like this slump is going to continue. And I think that's really, taking over the discourse just around Chinese deflation. When are they coming back is the question.
When are they coming back? It's been quite a while, Mohammed, and they are still hitting the growth forecasts, but it just doesn't seem like they're getting things well when it comes to demand at home, consumption. Yeah, it's a lot going on there. All right, let's move over to commodities. We touched on copper. I'd like us to look at gold for a second. Prices are on the back foot today, with uncertainty, of course, continuing to be the name of the game, meaning that, right, even though we are seeing a dip in prices right now, the chances of gold, going back to those record highs is very high, as investors continue to flee to safety. With that being said, does the slight downturn present some buying opportunity, especially for our local gold miners?
It's quite an interesting one. You mentioned the safe haven thing, and that's really been the big driver for gold over the longest time. But I've got to say, we need to maybe take a closer look at that, because where we are currently is that the all share is at or close to all-time highs. You could say the same with the S&P 500, and it's true for gold as well. Like, yes, we have come off slightly. I think we're below that $3,300 an ounce mark. I think we're closer to 3,260 there or thereabouts. But it is still massively elevated levels, and all of this is while there's been massive uncertainty prevailing in the markets, and equities sort of have been flying as well. So from that perspective, I am still a bit nervous. There's quite a bit of uncertainty that we can still expect to come, so hitting that sort of 3,300 3,350 mark is not inconceivable. I definitely think that could happen again, but as to sort of beyond that, I would be relatively nervous, and I think that's more a function of buying something so close to those all-time highs. But that being said, there's got to be something said for the fact that all this volatility, uncertainty is going around in the background. My only concern is that it is still so elevated even after coming off. So I probably wouldn't look to do too much buying. In fact, on the contrary, I wouldn't get too greedy. I'd probably still look to be taking a little bit of profit. That's not to say to sell my entire position, but to take a little bit of profit even at these levels. I would be quite chuffed with that.
And at those levels where gold is at, right, at those record levels, we did see some other precious metals coming to the fore, the likes of silver, the likes of PGMs. We saw a bit of a rally there. That has also started somewhat tapering off. But on the back of that, Tharisa's update out today, and they've pointed to stronger PGM prices boosting production. They've also pointed to stronger chrome prices boosting production. Just walk me through perhaps your analysis of that update.
Well, I mean, I think you hit the nail on the head, with what you noted just in terms of the PGMs. Now, we know that the Chinese are stockpiling PGMs just to start their sort of futures market in relation to platinum, so I think that's also been propping up the demand there, and thereby sort of underpinning the performance that we've seen. And I think their exposure, rather Tharisa's exposure to platinum has left them in good stead, So on just before this statement, they were up about 30% year to date, and I'd imagine all of that is really on the back of their platinum exposure. The production report did come in today, and look, the share did come off ever so slightly, but I wouldn't say that there's necessarily too much to worry about. Essentially what they said is, look, the production numbers are going to come in sort of towards the lower end of our guidance for the year. So as a consequence of that, they're just going to be slightly bringing down the full year guidance, and I think it was around 5%. And if I look at the share price reaction, we saw a drop of around 2.5%, close to 3% the last time I checked. So not sort of a visceral reaction, and I think had we seen something like that, it would have been somewhat unfair. It makes sense that there's a little bit of steam coming out now, but ultimately they're very well positioned, given the elevated platinum prices, so wouldn't worry too much per se. And again, it's a share that's had a fantastic run, perhaps not so much relative to the pure platinum plays, but this one is a little bit more diversified, so coming in at 30, maybe relative to the 60% we're seeing across the board, does actually make sense.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on what your industry peers find interesting.
So I looked and I saw the long bond yields have come down. There's so much uncertainty. So I decided to pick Vukile, which is a property stock. Vukile next year will have 60% of its earnings out of Iberia and the balance in South Africa. They've cleaned out their portfolio, they're pure property managers. They effectively will have a euro yield of reasonable numbers. And domestically, they invested primarily in malls that are township malls, which are quite vibrant. They're all full, and you're starting to see rentals going up. So for the risk-averse investor who's looking for income, you could do a whole lot worse than a Vukile.
If you can take yourself back just over a year ago, it was just after the elections, it was early days of the GNU, there was some uncertainty, and a lot of retail stocks then did very well the last half of last year. And many of them have come back all the way, some of the way, but some all the way back to where they were trading just over a year ago. And Italtile is one of those. So I do think that there's value in Italtile's shares. Yes, operations are under pressure, but with the June year end, I think if they are able in their full year results to at least maintain their headline earnings per share, or very close to maintain it, be only down slightly, that would be a very solid result from them. Not a lot of debt on the balance sheet, very cash generative. And then there were some issues with one of the directors that had some shares that were pledged. And because the shares been under pressure, the outstanding guarantee from the controlling shareholder was more than the shares that were pledged. So all those shares were sold in the market at under 10 Rand. And that has put pressure on the share price. Now that's out of the way, and the operating performance hopefully near the turning point, and hopefully some better days ahead for Italtile. It is my stock pick tonight.
So both Roy and JP going for local counters, Italtile and Vukile. I must say it's really a shocker that JP has chosen a local stock. So yeah, but what are your analysis on those companies?
Okay, so let's start with Vukile. That's one that I actually quite like, very well diversified. I think Roy mentioned that, by next year they'll have about 60% in Iberia. That's Spain and Portugal. That's a big part of, the reason that I like it. Obviously they're in the Eurozone, brilliant time to have sort of this positioning. I primarily like it for the hedge, and then he also made a point on, the local holdings seeing quite a bit of foot traffic, and that's relatively sticky, So from that perspective, really like Vukile in the space. In fact, of the property tickers locally, the ones I like best are those that have good sort of offshore exposure, and Vukile is very much in the mix. Their yield is quite attractive. I quite like Vukile. And then in terms of Italtile, JP spoke towards local retail, and I think in general local retail just looks very attractive currently. I think by all accounts this specific company, Italtile, has quite a great balance sheet. The management team is very savvy. But I would say if I have any concerns there, they'd probably be more macro concerns. I think I'm a little bit nervous about retail in general, in the sense, given the economic softness that we're seeing locally, like where's this growth? Where's this catalyst going to come from? With specific reference to Italtile, we know that home building, home improvement, those things are going through a bit of a slump, So that does make sense given where the economy is. But I think, just relevant to retail in general, where are we going to see that growth from? Where's that catalyst going to come from? That's probably the only concern I'd have there. But from a valuation perspective, it looks great, I gotta say.
Let's get into your stock pick. Where are you seeing opportunity at the moment?
So I have not gone local entirely. I've gone offshore, and I've actually gone for a Brazilian financial services company called New Holdings. I would be surprised if perhaps too many have heard of this, but in effect, their big exposure is a company called Nubank, and that's a fully digital bank operating in Brazil, Mexico, and Colombia. They offer credit cards, digital payments, personal loans, investments, the whole shebang, and all of that is done on a mobile sort of platform. As of this year, they've got about 100 million customers spread across Latin America, and they're actively looking to take advantage of that. The total addressable market is massively large there. We're probably looking at 650 million odd customers, and they're the ones that are most well positioned to take advantage of that, and I think when they do, this share is one that could fly. I think a very simple analogy, a rudimentary one, probably not the most appropriate, but think Capitec, but in Latin America. Okay. So yeah, that's my company, New Holdings.
New Holdings, one to look out for. Muhammed, thanks so much for your time and joining us to share your analysis of trade at midday. That was Muhammed Wagley from Sasfin Wealth.